Do we have a quorum? Good afternoon. This is the Finance Subcommittee number 2 on local tax infrastructure and authority. We are making sure that we are verifying that we have a quorum. Committee will go at ease. Good afternoon. The Finance Subcommittee number 2 is back in order. I believe we do have reached a quorum. Clerk, open the roll. Members, indicate your attendance on the electronic voting board. All right. Clerk, close the roll. Do we have a quorum? Quorum is present. Quorum is present. Thank you. Meeting will now start. On today, again, this is the Finance Subcommittee number 2 on local tax infrastructure and authority. Today, we have some administrative tasks that we need to do first. We have 2 members who have asked for their bills to go by for the day. We have House Bill 345 by Delegate McLaughlin and House Bill 272 by Delegate Walker. Those 2 bills, they have asked to go by for the day. The committee operates on motion.
Madam Chair, I move that those bills go by for the day.
Second.
It has been moved and properly second that House Bill 345 and House Bill 272 go by for the day. That is a voice vote. All in favor, say aye. Aye. Nays have the same option. We have those 2 bills, House Bill 345 and House Bill 272 will go by for the day. All right, so now that leaves about 8 bills on our docket. I know that we have some heavy support on a few bills, and we will need to limit testimony both in person and virtual to a set time limit so that we can make sure that we hear from everyone. And I asked that committee members as well, when I pose any questions or concerns to be raised by the committee, that you will use your yellow request to speak button so that we can put you in the queue, and therefore we can have your comments lifted in an orderly fashion. So first patron that we have on the docket is House Bill 474 by Delegate Rasool. Delegate, you have the floor.
Hello. Good afternoon, members of the subcommittee. Pleased to be with you all. What we have with House Bill 474, there's currently a program that is in place, and what this does is increases the maximum assessment for this land bank program. What happens right now is that the land that is subject to the locally appointed special commissioner that can convey this property based on delinquent taxes, that maximum limit is $75,000. And so if you've got a piece of land, there is it's valued under $75,000, then they can the special commissioner can convey that to the land bank. What this does, because of the increase that we've had over time with the value of land, this increases that from 75 to 150.
All right, thank you, Delegate Rasool. I will open up for questions and comments in the committee. I know that with advisement from Uber Chair that there is an inflation adjustment that may have raised this cap. And I believe that we may offer a friendly amendment. The patron is open.
Sounds good.
At the advisement of our Uber Chair, I will have her to chime in on a possible friendly amendment, possibly setting the cap a little bit below 150K. Madam Uber Chair. She is... Madam Uber Chair, if you do you want to propose a cap?
Certainly, I thought perhaps someone else would, but again, as I look at inflation since this was last increased, I think it would be more appropriate to change on line 20, the 150,000 back to 125,000, which is still more than inflation of the 75,000 from when it last was increased. So I so move.
Has been moved and seconded to make the amendment to raise that cap rather than double it to 125,000. Is the patron amenable for that?
No, that's a great amendment.
All right, so it has been properly moved and seconded. Is that a voice vote for that amendment? Question posed to the clerk.
Voice vote.
Voice vote, all in favor say aye. Aye. All nays have the same option. So that amendment is before us where we will change that cap from 150 to 125K. So right now we have this bill before us with the different cap numeration. I would like to open it up for those who are in the room who are in support of House Bill 474. If you are in support, please come forward.
Madam Chair, Preston Bryan, on behalf of the City of Roanoke, we appreciate Delegate Rasool bringing this bill. The amendment is certainly agreeable. The city over the years has renovated and rehabilitated dozens of homes and put them back on the open market for safe and affordable housing. So it's been a very successful program. We support the bill.
Thank you. Is there anyone in the room who is opposed to House Bill 474? Please come forward. All right. Is there anyone online for House Bill 474? There is no one online. I will bring it back to the committee. Anybody on the committee has any questions or comments? Delegate Walker.
Thank you, Madam Chair. Delegate Rasool, so I understand this is a program that you've already set up and established. So all we're doing just is increasing the amount so that more property could be available for whatever purposes there.
Yes, Madam Chair, Delegate Walker, the program has been in place and very successful over the years. Just with the growth in land value over time, we're just adjusting the cap.
Okay, so this is like a land bank.
Correct.
Thank you. Thank you, Madam Chair.
Delegate Keys-Gamarra.
Thank you. Thank you for chatting with me earlier today. I did have an opportunity to read it. I was wondering if you could clarify the difference when a nonprofit organization is involved. I believe it's on line 56.
Yes, Madam Chair, Delegate Keys-Gamarra. What happens is that the locality has the opportunity to be able to work with, so for example, in Roanoke, Total Action for Progress, which is the community action agency, a local nonprofit, serves in that capacity in managing the land bank. And so that's who they would be working with in this case.
All right, is there any other questions or comments from the committee? All right, I will leave last words for the patron. Delegate Rasool.
Thank you, Madam Chair. Hopefully the subcommittee looks favorably upon the bill.
All right, so we have before us House Bill 474 with amendment. Committee operates on motion.
Move to report as amended.
It has been moved and properly second that House Bill 474 as amended be reported. Clerk, open the roll. All right, clerk, close the roll. House Bill 474 passes. It has been be reported with amendment from 9-0. Thank you, Delegate Russell.
And if I might say, this is too much, but to my friends, Delegate Ware and Delegate Walker, but I think this is the first time I've been in a subcommittee where all of the Democrats are women. So congratulations. It's quite a. It was very, very different when I first came here.
He may have more. All right, so the next bill before us is House Bill 550 with Delegate Anderson. Please, you have the floor.
All right, thank you, Madam Chair and subcommittee members. I am here today to introduce House Bill 550, which is a bill to rectify previous legislation that cut James City and York County out of the ability to self-govern when it comes to local admissions within their jurisdiction. They are the only two localities in the entirety of the Commonwealth that are unable to receive recurring revenue from our robust tourism. This is a permissive bill that simply allows the local boards to dictate how they govern, and I believe correcting this language will make sure every locality is working within the same framework. In addition, this bill will offset the need to increase local property tax and lessen the financial burden on our residents while still funding critical infrastructure, public schools, and our community needs. I hope it is the will of the subcommittee to vote yes on this bill, and I am happy to answer any questions.
All right, thank you for the delegate for bringing this forward. Certainly, we support tourism. I just wanted to lift up before we open up for the rest of the committee. Does this authorize new admissions tasks, and will that be a direct cost for families and visitors? If the delegate can confirm that.
Yes. So what this does is allow James City and York County specifically to have the same permissive as every other county and locality within the Commonwealth to decide with their local board if they want to charge an admissions tax. And more or less it is going to impact, in our districts specifically, Busch Gardens and Water Country, which is a large tourist driver, and majority people that are coming there are tourists. So if that admission tax goes into effect, we would see that offsetting actual residents' costs and actually benefiting the localities as a whole.
Thank you to the delegate. I would like to open it up for the committee. If you would like to speak, ask questions, or offer a comment, please press your yellow request to speak button. I have first in line is Madam Ubi Chair Watts.
Thank you, Madam Chairman. I'm going to phrase my question a little bit differently, having known the history of this. So in 2018, James City County and York both were
as well as City of Williamsburg.
Enacted a 1% sales tax. Is that correct?
There is a sales tax, which you're talking about. It's the tourism tax. To be clear, though, there's great stipulations on that 1%. A third of that tax must go back to tourism and only tourism. So that really limits where those funds can go when it comes to CIP or general funds.
So further clarification, if I may. So the 1% sales tax basically is paid by the residents and whoever's visiting, but all residents there would be paying an additional 1% sales tax. And a major portion of it, though, is going to tourism, not schools or anything else.
Correct. None of this money has been going directly to things like education and infrastructure such as that. It's by and large going to CIP, and then the third has to go to the tourism cost.
Delegate Watts.
If I could, Madam Chair, I'm making a comment, but certainly if there's a response to what I'm saying.
Chair Watts.
So that as I look at this, what you're asking for, and I'm assuming that James City County and York, in fact, want this, and it would have to be enacted by the Board of Supervisors, et cetera, that what you're looking for is a source of revenue that for the most will to a much greater degree come from outside the county of tourists visiting as paying for admission, when in fact the 1% that then Senator Norman got enacted was something that is paid for by the residents and not really used for the residents' purposes. So what I see is assuming that you all wanted it, and I assume that you wouldn't be here if they didn't want it, is a source of revenue that comes predominantly from outside the county that you can use for general county purposes.
So to answer the delegate, Madam Chair, yes, to be clear, these funds are designated to mainly be for tourists that come into the vicinity, that we can generate this recurring revenue and specifically target things like infrastructure, lessen the burden of future increase on property tax, as well as fund our public schools, which we are desperately in need of.
Thank you, Madam Chair. Anyone else on the committee has a question? Delegate Keys-Gamarra.
I'm sorry, Madam Chair, I may have missed what was said in this answer. I just want to make sure I get clarification. The previous tax from 2018, where exactly is that money going, that 1%?
Yeah, so the 1% that also, by and large, was considered a tourist tax, and it does impact our tourists as well. But obviously, with it being on certain things, it impacts local residents also. So with that 1%, a third of it has to go into tourist-directed funding. So it has to be like marketing. It has to be basically put back into driving tourism into the area, and that's how it has to be spent. The remainder has to go into CIP. So technically, that is not really being put forth towards things like education specifically, public education, which is something we're really looking to fund with this type of tax.
Do you have a follow-up, Keys-Gamarra?
No, thank you.
Thank you. Anyone else on the committee has anything to lift? Just wanted to just to confirm with the delegate, just to make sure that I understand correctly. And I understand that many localities are looking for sources of revenue and desperately trying to fund those key things within their locality. But I just wanted to kind of press on that this would be an additional tourism tax that is imposed by sources outside of the county as opposed to the residents that live in the county.
Correct. That is the target audience for this piece of legislation, should the locality have the authority to do so.
Thank you, Delegate, for that confirmation. So now I'm going to open it up for anyone in support of House Bill 550. Come forward to the podium. You have the floor.
Madam Chair, Elizabeth Parker with Troutman Strategies representing James City County. This legislation we worked on with the delegate on this legislation, and it is a priority of James City County. And we have members of our Board of Supervisors on the line to answer any additional questions you all may have. Thank you.
Thank you.
Good afternoon, Madam Chair, members of the subcommittee. I'm Katie Boyle with the Virginia Association of Counties. We've had a long-standing position in support of parity between cities and towns and counties. In taxing authority in terms of revenue diversification. We made huge strides in this respect in 2020, thanks to the leadership of Madam Uber Chair. This bill eliminates one sort of idiosyncrasy in the code and places these two counties on par with the other counties that were granted this authority in 2020. So appreciate your consideration. Thank you.
Thank you. Is there anyone else in the room who is opposed to House Bill 550? Please come forward.
Good afternoon, Madam Chair, members of the subcommittee. Tommy Herbert, representing the Virginia Restaurant, Lodging, and Travel Association. On behalf of our members, we do oppose the bill. It will put an immediate 10% increase, obviously, onto, once it is passed, onto the attractions in the area. And I think at these, in these uncertain economic times, an arbitrary 10% increase in the ticket price is going to have a deleterious effect on tourism in the area. We would perhaps suggest, beyond our opposition, that some portion of this revenue be dedicated to tourism development to help offset that effect. But unfortunately, we have to oppose the bill at this time. Thank you.
Thank you. I will turn to some virtual testimony. There are a number of folks online who are for House Bill 550, I believe. First, we have Ms. Ruth Larson.
Thank you very much, Madam Chair. Ruth Larson, Vice Chair, James City County Board of Supervisors, and immediate past president of Virginia Association of Counties. Thank you so much for this opportunity. Yes, we are just asking that we have an opportunity. We have not said it's going to be 10%. That is, a percentage has not been discussed yet. We just want to be equitable. Our tourism partners in the city of Williamsburg are able to have this. We are not, and neither are our partners in York County. And just as an FYI, I did recently go on to Tampa Bay Busch Gardens and put in buying a ticket, and there it's an additional $18.52 in taxes and fees. So we are one of, I think, the only Busch Gardens in the country, I believe that's correct, but at least I know Tampa does, that is not allowed to do those types of taxes. Thank you.
Thank you so much. Now we have Mr. John McGlinnan.
Yes, Madam Chairman.
Go ahead.
Yeah, this is John McGlennon. I'm the chair of the James City County Board of Supervisors, and I'm speaking in favor of giving James City County and York County this authority. We are, in fact, the only communities in the state that are prevented from this opportunity, and the equity that we're asking for is something that I think would be well deserved for a community that is called on to provide a lot of time, energy, effort, and even more beyond the tax that was approved in the last decade. We do provide a lot of services for our tourism visitors, and really do try to make sure that they have a wonderful time and enjoy their opportunities in the community. But at the same time, they do impose some costs on us that we would like to be able to address if we find that there is an opportunity to do so.
Thank you.
Again, this is really a matter of equity.
Thank you so much, Mr. McGlennan. Is there anyone else online for testimony? Is there anyone online who is opposed to House Bill 550? So there is no one else on virtual testimony. I will bring it back to the committee. Please press your request to speak button if you would like to raise up an issue. Delegate Garrett.
Thank you, Madam Chair. I'm grateful to the members of the Board of Supervisors, but as soon as I heard that they were the only Busch Gardens in the country that didn't have this ability to tax, I had to Google how many Busch Gardens are there, and there are 2. So that's an artful argument, but I don't think we should model our tax code after Tampa, Florida, just because they're Tampa, Florida. Thank you, Madam Chair.
Thank you, Delegate Garrett. Delegate Carroll.
Thank you so much, Madam Chair. I just wanted to do for clarification. I know that we talk a lot about Busch Gardens. The delegate referenced Busch Gardens of Tampa, but I know that Busch Gardens has other amusement parks throughout the country, whether that be Sesame Street and some other various things. So just wanted to make sure that though the supervisor prior to us, and correct me if I'm wrong, Delegate Anderson, but we don't want to get caught in the semantics of it. I thought it was and correct me if I'm wrong, Delegate Anderson, the equity of the two localities that we want to focus on today.
Correct, yes. We're just making sure that, again, everyone is functioning from the same framework when we're talking about how they are governing their selves localities.
All right, thank you, Delegate Bennett Parker.
Thank you, Madam Chair. I was actually, I think, about to make the same point. Just in terms of equity, we're not talking about two Busch Gardens. We're talking about all of the other localities in Virginia that have this authority and these two that do not. I probably should have fact-checked this first, but I'm pretty sure that my locality, our admissions fee is 50 cents. So thank you, Madam Chair.
Thank you to members of the committee. I just wanted to make sure, during this time of this year, we have to factor in a whole lot of things, particularly when it comes to affordability. And so, of course, we want to support our localities who are looking for other sources of revenue as well. I still see questions for members of the committee. So I have Delegate Cole.
Delegate Anderson, do you...
Delegate Cole, address the chair, please. Thanks.
Oh, I'm sorry. Madam Chair, a question for the patron.
Yes.
Do you know whether, so Kings Dominion is in Caroline County, my district. Do you know whether, I don't know whether Kings Dominion has the authority or whether they...
Madam Chair, they do have the authority to charge a tax in that county.
Thank you, Delegate Cole. Delegate Watts.
Thank you, Madam Chair. I was going to enter in on the previous two questions. Again, in 2020, I was the patron along with Senator Hanger from the far southwest to finally bring equity between cities and counties. For the last century, cities have had basically unbridled authority in these areas of taxation, whereas counties up until 2020 were barred, usually without referendum, or were barred from certain taxations. So 2020 made essentially counties and cities the same. There were some compromises, ceilings on what counties could do, whereas cities, for example, there was no ceiling on the meals tax, whereas for counties, there is a ceiling on the meals tax. But all jurisdictions were treated the same, except for James City County and York, and that was because of the then senator who had agreed 2 years earlier not to raise any other taxes when he got the 1% additional sales tax passed through the General Assembly. So that's the history. So as far as City of Alexandria, Delegate Bennett Parker, you've had it for a century. And as far as all of the other counties, it's only been since 2020 that counties have begun doing this. Final comment, editorial, 6 of our largest jurisdictions are counties. So that this is reflecting then the broader urban taxation policy that has tended to be only limited to cities. So obviously it includes all the other entertainment venues as well. Should the local government decide to raise the tax, it's permissive, not directive.
Thank you for adding that history. That is very pertinent for us. Delegate Watts, I do have one last comment from Delegate Garrett. Thank you.
Thank you, Madam. It should probably have been better if I left my microphone off. I am running the risk, Madam Chair, of falling into the trap of everything you read on the internet is true. But according to the internet, Caroline County does not have an admissions tax. I'm not sure, and I'm not calling anybody a liar.
Okay.
Yeah, they don't have it.
Madam Chair, I just want to correct. They have the ability to levy the tax up to 10%, which is something that we here in James City County and York County do not.
Thank you for that clarification. This is a local option. It is permissive in nature. Confirm that, Delegate Anderson?
Yes, Madam Chair.
Okay, thank you. So now that we have, I will allow you to have last words, Delegate Anderson.
No, I thank you for all of the questions and the robust conversation around this. And I hope it is the will of the committee that they vote yes on this bill. Thank you.
All right, so committee operates on motion.
I move to report.
Second.
It has been moved and properly second to report. Clerk, open the roll. Clerk, close the roll. HB 550 reports on a vote from 7 to 3. Thank you, Delegate Anderson.
Thank you so much.
All right, so now we have before us, let's see. We have House Bill 68 by Delegate McNamara. You have the floor.
Thank you, Madam Chair, members of the committee. I believe there is an amendment in nature to substitute. Do we have it to pass out, or should I explain it, or would you prefer to have the clerk clerk explain it?
If the attorney will explain the amendment for us.
Yes, Madam Chair, members of the subcommittee, the substitute makes a clarifying change. It relocates the language in the bill just to clarify that the inflation adjustment contained in it is for purposes of determining whether the public notice and hearing is triggered rather than affecting the actual assessed value of property. And that substitute will be posted online shortly.
All right, so do I have a motion to move the substitute? All right, it has been moved and properly second to move the substitute. As a voice vote, all in favor, say aye. Nays have the same option. All right, so we have HB 68 with substitute before us. Delegate McNamara.
Thank you very much, Madam Chair. So HB 68, first off, what it is not. It does not change assessed values. It does not change tax rates. It does not change how much a locality charges for their real estate tax rate. What it does change in certain situations is the notice requirement. Why is that of benefit? When we currently have a law in place that says if your assessment goes up by more than 1%, which oftentimes it does, localities have a fair amount of expense involved in notifying all of their constituents. There's specific requirements on what is on that notice, as well as holding a public hearing. What this bill says is, okay, all those things are important. We need to make sure our citizens know if we're increasing, if assessments are increasing and it's going to result in more taxes. However, the public hearing and a lot of the expense associated with it, if in fact there was a large inflationary factor, it bases that notice requirement on the increase from a real perspective. So if the increase was 3%, but inflation was 10%, they would not need to go through the expense and trouble of making those notices. I also think it would be clearer to the citizens that we are trying to make sure we educate and know what their local governments are doing. It is difficult to put an actual dollar amount of savings to the locality, but I will point out in the fiscal impact statement that the bill could result in an unknown positive revenue impact on localities. It would have no impact on state revenues. Positive impact to localities, again, would be because they don't have the expenses involved with these notices and public hearings and advertising the public hearings and so forth and so on. The bill has the support of the Virginia Association of Counties. I do have folks online from Roanoke County. I know there's other localities that might wish to speak as well, but I will turn it back to you, Madam Chair, for your direction as to the next step.
All right, thank you, Delegate McNamara. So I'm going to turn it to the committee. Anybody has questions or comments, please press your request to speak button. All right, so there is no one in the queue, so I will open it up into in the room for anyone who is in support of House Bill 68. As with this substitute, please come forward.
Thank you, Madam Chair. My name is Eldon James on behalf of Roanoke County. The county attorney is online to answer questions. He has a statement on behalf of the Board of Supervisors. I just want to say thank you to Delegate McNamara for carrying the bill on the county's behalf, and thank you for the Uber chair for her input on cleaning up the language.
Thank you, Madam Chair, members of the subcommittee. Katie Boyle again with the Virginia Association of Counties, and this idea was brought to us by Roanoke County, and we discussed it last summer and fall as part of our Finance and Elections Steering Committee, and our members did agree to support it. The chair of our Finance Steering Committee is online, so I'm not going to steal his thunder, but I would say the discussions in the committee really centered around how best to communicate with the public about how assessment growth and proposed tax rates intersect, and that's what this bill seeks to accomplish. So thanks for your consideration.
All right, thank you. So is there anyone in the room who is opposed to House Bill 68 as substituted? All right, so we do have some persons on Zoom. We have one person. I believe we have Mr. Jim Eisenhower. Please turn your video on as you deliver.
There we go. Thank you, Madam Chair. Very briefly, I'm the member of the James City County Board of Supervisors, but I'm also the chair of the VACO Finance and Elections Committee, and we have addressed this with Roanoke quite extensively during our meetings. I would characterize this amendment as what I would call truth in advertising. When we are required to, after an increase in our assessment values of more than 1%, we're required to advertise what's called a revenue neutral tax rate. And in fact, if we have a significant amount of inflation, as we've had the last couple of years, we have 2 to 3% a year, the revenue neutral is revenue neutral in absolute dollars, but not in the purchasing power. If we have a county budget of $100 million and revenue assessments or inflation goes up by 3%, it takes $103 million to buy the same goods and services and support the same the people of our county in the same way that the previous year's $100 million did. So I think that by adjusting for inflation, you are actually representing the purchasing power of what would be required to continue operations of the county.
Thank you. Thank you, Mr. Eisenhower, for your testimony. Also online for House Bill 68 as substituted before us, we have Mr. Peter Lubeck.
Hi, good afternoon, Madam Chair and members of the subcommittee. And my name is Peter Lubeck. I am the county attorney for Roanoke County and have been asked by my Board of Supervisors to urge the support of this bill. And each year, the statutory notices that this bill proposes to amend generate more confusion and concern among county taxpayers than really any other issue. The purpose of these notices is to inform taxpayers of a locality's intent essentially to grow government by collecting more revenue from real estate taxes in the present year than in the preceding year, even if the locality's tax rate remains the same. Such localities are required, as Delegate McNamara explained, to publish information including what the lowered tax rate would need to be in order to offset this increased assessment. And often, upon receiving these notices, citizens insist that in order to avoid growing government, the locality must adopt the advertised lowered rate. And one reason this is problematic is that the advertised rate does not take inflation into account. And we believe that communicating a lowered rate that takes inflation into account.
Thank you, Mr. Lubeck. We appreciate your testimony. Do we have anybody online that's opposed to House Bill 68? Anyone online who is against? All right, so they are not online. So now I will bring it back to committee members. I see Delegate Carroll.
Thank you, Madam Chair. Question for the patron?
Delegate Carroll.
Delegate, I guess I struggle with, in general, right, and you and I talked about this, how do we balance less work for the localities with the lack of public trust that's currently available when it comes to just their overall pocket, like what they're going to have to spend? I get it, it may cause some level of confusion, but from the work that you and everybody that has testified here today as to their support of the bill, how do we balance that? How do we take that into account as we move forward to take away the notice that a bill will inevitably be going up for the average day Virginian today on how we proceed.
Madam Chair.
Delegate.
Thank you, Madam Chair. Great question. And I think if there is a real increase, more than 1%, we go through all the steps that we're going through right now. So none of that will go away. When I say real increase, I know I'm talking about inflation adjusted. In my mind, I think it's more intuitive. And it's really more accessible, that information that you're providing to the public. And I think if I think of there's certainly some folks that just get it and understand inflation and how much the nominal of it might be. There's many of us that we represent that are not real familiar with that. And I think, remember, the possibility also exists that we get into a deflationary environment. So I think it really just presents fair to the public.
Thank you. Do you have a follow-up, Delegate Carroll?
No, Madam Chair, no follow-up question, but just as a note to where I agree that, we should make the job easier for our localities, Madam Chair, but I think we should balance that with making sure that as people go to pay their bills and try to balance their checkbooks, that any type of increase that they may see, we encourage transparency throughout this entire process. And I'm just overall concerned that this process, though it provides a level of advantageous benefit for the localities and the people that do the job, the end user may then not have the necessary information and or may be surprised. And that's not what we want to move forward with.
Thank you, Delegate. I would offer our Uber Chair for any added information about House Bill 68. Madam Chair Watts.
The only history I can give is that when this was first put in, there was a lot of resistance from localities saying that we have these hearings, it's known as adopting the budget. And we go through all of the publication of whether or not we're going to increase taxes and why. And so there was the opposition was, this is too much. This is a whole duplication. The bill before us would reduce the number of times such separate set of hearings would take place by first taking away the percentage of the total assessment due to inflation before you look at whether or not after that there's been 1%. Then all of the hearings would stay the same. So to those who are concerned about public visibility, then this reduces the number of hearings, and if that's your concern that there ought to be more hearings, then you would vote against this bill. If you instead say that the budget hearings plus extraordinary overinflation is the adequate to trigger the extra look, then what the Delegate McNamara is proposing reduces that.
Thank you, Chair Watts. I do see Delegate Franklin.
Good afternoon, Madam Chair. I just had a quick question for clarification for the patron.
Delegate Franklin.
Thank you for the explanation. Just had a quick question with regards to, is this permissive or is it more of a allowance?
Thank you.
Requirement.
Madam Chair, this would be the requirement in the Commonwealth of Virginia. And in final word, I would like to go back to the Uber Chair questions as well.
Yes, go ahead, and Delegate McNamara.
So I would say, well, the public hearing relative to the tax rate would be avoided, but remember, this is only occurring when there's 1% or less from a real term, from a real perspective. That's the only time that will go away. It will not alleviate the budget hearings that require as part of a budget adoption. So a budget adoption occurs middle of April. The first reading of that usually sometime in the mid-March. There is, and I believe it's code. I would defer to the Uber Chair, but I'm almost sure that it requires 2 hearings on the budget adoption, and the budget adoption has all of the tax rates included. So you have to make a statement, you have to advertise, you have to say our rate will not be higher than. So I think the public is to some degree receiving that information. I would also say, again, I would like to just apologize. It's so difficult the way this bill was written in this area of the code to make it clear and understandable. I would like to, and I appreciate the council working with myself and your Uber chair and trying to clarify the wording.
Thank you, Delegate McNamara. I see Delegate Keys-Gamarra.
Just one clarification, and the patron can comment. My only concern at this point is that there is a change in how this is happening, and I wonder whether people will be put upon or feel as though it kind of happened quietly without them understanding the change, right? And so that's my concern in terms of how we've been doing things since the previous change, and now people have become accustomed to getting that notice, and now they won't be getting that notice. And so I just want people to feel, and this kind of follows on what my colleague to my left here, Delegate Carroll, said, how would you deal, is there a mechanism in this bill to make sure that people understand that the method of how we're dealing with this has changed?
Thank you, Madam Chair. This is a fairly new reporting and hearing requirement from just probably 5-6 years ago. And it actually came out of a Republican House when that bill was originated, and I think this is just, it simplifies it a little bit, and there is tremendous confusion when you look at the bill and you look at this is assessed value, this is the new rate, so then people are confused, think, okay, I'm having a new rate when you're really not having a new rate, and the new rate is in conflict to what you've already adopted in your budget when you've sent out your budget notice. I think this clarifies it to the individual. I don't think it's hiding anything from them. That's certainly not a bill I'd be interested in carrying.
All right, thank you, Delegate McNamara. Delegate Daugherty, did you have a question?
Yes, Madam Chair. I think that I just also would kind of like to echo the transparency concerns that I've heard from some of the other subcommittee members. I just feel like we have an opportunity, we should have the opportunity to create as much transparency as possible. And I just think that this language change potentially is going to prevent folks from understanding what's actually happening. And so I appreciate the opportunity to.
Thank you, Delegate, for your comments. I am going to leave it to the patron for last words.
Madam Chair, I appreciate you taking the time to look at the bill today. I would say if there are strong transparency concerns, I might ask you to consider continuing it to next year, and let's work on it until then.
All right, so the patron has lifted up continuing this bill to 2027, and the committee operates on motion.
Second.
It has been moved and properly second to continue House Bill 68 as substituted and continue this to 2027. That is a recorded vote. Clerk, open the roll. Is a voice vote? All in favor to continue House Bill 68 as substituted to continue this bill to 2027? All in favor, say aye. Aye. All opposed have the same option. All right, so this bill, House Bill 68 as substituted, has been continued. Thank you to the patron.
Thank you very much.
All right, so next on our docket is House Bill 854 with Delegate Cousins. You have the floor.
Thank you, Madam Chair, and committee members for
considering this bill. So well, first I have a substitute that I would like to move.
Do you want to explain this substitute?
Sure. I'll have counsel explain.
Yes, counsel.
Madam Chair, members of the subcommittee, the substitute in the original bill, the language contained in A2 of 3651, that language allowed a locality to exempt property owned by a nonprofit in controlling part that operates its property for religious, charitable, patriotic purposes. That mirrors languages contained in A1. The substitute limits those purposes in A2 for property that is held by a nonprofit organization in controlling part that is used for charitable or benevolent purposes for the provision of affordable housing, as that term is defined in relevant code.
Thank you to counsel. Do I have a motion to move the substitute?
So moved.
It has been moved and properly seconded. Move the substitute. That is a voice vote. All in favor say aye. Aye. Nays have the same option. So we have the substitute before us. They'll go ahead to the patron. You have the floor.
Great, thank you. House Bill 854 provides a technical fix to ensure that nonprofit affordable housing providers who are financed with low-income housing tax credits are able to fully access existing tax relief measures that are provided for them in the code. Current code grants localities the authority to exempt or partially exempt property owned by a nonprofit from property taxes if the property is used for charitable or benevolent purposes. However, affordable housing properties that are run by nonprofits often have unique, complicated ownership structures because financing programs such as LIHTC require the use of private investment through for-profit limited partnership or limited liability companies in their federal regulations. Because of these unique ownership structures, localities are often unsure whether they can provide tax exemptions to nonprofit affordable housing entities who utilize LIHTC. So this legislation just clarifies that nonprofit ownership can be defined to include nonprofits that are operating affordable housing as defined in the code section that's referenced in the bill. This bill does not broaden or restrict localities' authority or existing constitutional tax exemptions, but simply makes those more effective. This bill does not provide a mandate for localities, but it simply lists nonprofit affordable housing as a possible allowable use. By clarifying the meaning of nonprofit ownership, this bill will restore local authority that was always intended under the charitable use exemption, but that has been undermined by evolving federal financing rules. Local governments need flexible, cost-effective tools that make preserving and expanding affordable housing developments financially feasible. And this bill will ensure that localities are able to fully use the existing tools to address the affordable housing crisis in Virginia.
Thank you to the patron. We have before us House Bill 854 as substituted. I'd like to open it up to committee members. Please press your request to speak button if you would like to ask a question of the patron or offer comment. All right, so I appreciate the patron for bringing this forward. I know that we wanted to tighten the provisions to really narrow that nonprofit status to keep from future abuse of this particular provision. And I wanted to make sure that we confirm that we do have some tight restraints given in the Virginia Constitution under, I believe, Article 10, Section 6, that defines that nonprofit, that defines affordable housing, and then, making sure that we have proper guardrails for localities to follow. Could you confirm that for us?
Yes, I can confirm that, and I'll just try to explain, and then council can correct me. But so under Article 10, Section 6 of the Virginia Constitution, localities are already able to exempt property taxes for nonprofits nonprofits or organizations that have charitable or benevolent purposes. And so that section of the Constitution gives localities essentially the authority to pass an ordinance, to have a public hearing, to allow for public comment, to determine essentially what the qualifications are, the reporting requirements for the organizations, and also the qualifications for exemption. And then also under the code, I believe it's code section 58.13603 that sets forth the exemptions that are not applicable when the building is a source of revenue. And so there, through that section of the Constitution, also this section of the code, localities essentially have the constitutional and statutory authority to determine what organizations are exempt based on a charitable or benevolent purpose. So, but council, correct me if I'm wrong there.
Thank you to the patron. I'd like to open up, but before we do that, open up to the room, I will like to entertain a question by Delegate Ware.
Thank you, Madam Chair. And I would also like to ask council, could you give me specifically what organizations or what categories of organizations are now constrained or eliminated as potential nonprofit entities that would be eligible under this? How does this, where does this bill with the substitute?
Council.
Madam Chair, Delegate Ware, with the substitute, so the original bill, the language allowed a local governing entity to create an exemption for property that is owned by a controlling interest of a nonprofit entity, but it allowed it to be exempt on property that was used for religious, charitable, patriotic, historical, benevolent, cultural, or public park and playground purposes. And those are the categories that are also laid out in the Constitution in the section that Delegate Cousins was referencing. The substitute limits that language, and it only allows a local governing body to create an exemption for a property that is owned by a nonprofit that has a controlling interest, but for purposes of charitable or benevolent use, and that is specifically limited to the provision of affordable housing.
Thank you for council. Delegate Ware, do you have a follow-up?
Yes, I do. Thank you, Madam Chair.
Delegate Ware.
So would patriotic organization no longer be eligible?
Yes, Madam Chair, Delegate Ware, that is correct.
Thank you. So I would like to open it up for persons in the room who are in support of this House Bill 854 as substituted. Please come forward.
Thank you. Good afternoon, Madam Chair, members of the subcommittee. Isabel McLean with the Virginia Housing Alliance, and we are in great support of this bill and thank the patron for bringing this here. We think that this is a really valuable tool. Again, just an option for localities. They don't have to use this, but this expands their authority and the options that they have to support affordable housing, but within the authority that they already have granted through the Constitution and our code. And I did want to just speak really briefly to the most recent question that was asked about whether the substitute reduces the type of organizations or purposes that are allowed. And I wanted to just clarify that the substitute relates only to the additional clarification of ownership structure that we've added here. So it doesn't change any of the existing authority that they already can do for nonprofits that are used for patriotic purposes, for example. We've just added the technical fix for how they could consider the ownership structure of nonprofits and narrowed for that flexibility to only apply to affordable housing, because that is the intent here. Because as the patron explained, the largest source of funding for affordable housing is the federal low-income housing tax credit program. And the way that it works, it does require for-profit participation in the ownership entity. That's just the way that it is set up. And so we would like that to not be a disqualifying factor when, for all extensive purposes, that property is owned, managed, controlled by a nonprofit. and all decisions about how that property is run and proceeds from that, et cetera, are made by a nonprofit. So we absolutely support this bill and appreciate your consideration. Thank you.
So I have a question for you before you leave the podium. So I know some local commissioners of revenue have raised some concerns, particularly with the narrowing structure of nonprofits. They want to make sure that nonprofits who with no 990 filings, or they just want to make sure that nonprofits are not created as shells. They're worried about abuse of this. And so, really they're saying that HB 854, and it may be because of the way that our Constitution is written, that it's relying on good faith or IRS status or any type of local ordinance language, which can vary. If you can speak to that a little bit for us.
Absolutely. Thank you, Madam Chair. So specifically to that concern, I will say that, first of all, to reiterate that this is just an option, and we are working within the existing constraints of our Constitution, which very much reiterate that the decision on whether or not to do this, what is considered charitable and benevolent use, how to determine if a property is owned by a nonprofit, and how they determine what that ownership has to be determined and decided by a locality when they pass an ordinance and go through the process that's outlined in state code about having a public hearing, et cetera.
Follow-up question for you.
Yes.
So I just wanted to make sure, just to clarify, I know a lot of folks are concerned about legislation that has been nicknamed Yes in God's Backyard. How does that overlap into House Bill 854?
Also, excellent question, Madam Chair. Quickly, I guess to finish the answer to your first question, just to say that because of that, we didn't want to overstep the authority granted by the Constitution for localities to determine how to do this, to give them even more restrictions on how they have to interpret what's already given to them to decide what property is owned by a nonprofit for this purpose. And so ultimately, to answer your question, it will be up to the locality and the ordinance to determine how they verify that ownership, but they have the flexibility to do that how they choose. And we do encourage that. I mean, it's for them, I mean, they would have the incentive to do this well because any sort of abuse would mean lost revenue for them if they chose to do this. And so that would align with the authority that they already have through the Constitution to determine what is nonprofit, what is charitable, benevolent use, et cetera. So that is the restrictions we're working through, that would need to be determined by an ordinance, but we do believe that they can do that in a way to avoid the abuse. And then to answer your second question, that's a really great question about the alternative bills that are kind of before the General Assembly this year regarding trying to provide more support or facilitate development of affordable housing on land owned by faith-based organizations. And I will say that our bill does not at all impact that bill. There's a little bit of confusion because that bill, essentially what it does is it is proposing an expedited rezoning process for affordable housing developed on land owned by a faith-based organization or tax-exempt nonprofits. And they are specifically referring to a section of code where the General Assembly itself determined what was a list of tax-exempt nonprofits. And that was done under previous practice when the General Assembly was designating and classifying what nonprofits are tax-exempt. But ever since the Constitution was ratified in 2003, that is no longer practice, and now that is recognized that is up to localities to determine what nonprofits are tax exempt, and so that list is no longer being added to, but it is still existing in code and continues. For example, Habitat for Humanity is one of the nonprofits that's tax exempt on that list. And so they and faith-based organizations are included under faith and housing, but our bill does not add to the amount of tax exempt nonprofits that would be considered because that is separate, a decision made by localities, not adding to that list decided by the General Assembly. I hope that that's clear.
Thank you. Thank you for clarification. I appreciate you. So I would like to open up for anyone else who is in support of House Bill 854. I would offer that opportunity for those who are opposed in the room of House Bill 854 as substituted. Is there anyone online in for or support? There's no one online, so I will bring it back to committee members for any last comment or questions. There are none. I will let the patron have last words.
Thank you for considering this bill, and I hope that you all move to report it.
All right. I do have one last comment from Delegate Bennett Parker.
Thank you, Madam Chair. I did have a question. Thank you, Madam Chair. I did have a question for the patron. I just didn't quite hit my button quick in time. So we've heard a lot, and I just had a couple of clarifying questions. So first, I think related to the question Delegate Ware had asked and the clarification previously, this substitute does not take away any status for anyone else. It just adds the ability for localities, if they so choose, to exempt the language in Section 2 around affordable housing. Is that correct?
That's correct.
Thank you. And then the follow-up to that, Madam Chair.
Follow-up, Bennett Parker.
It seems to me like this is a permissive bill for localities. They don't have to do anything with it if they don't want to, and it would give them a tool to make housing more affordable. Is that correct?
That's correct. Thank you,
Madam Chair.
Thank you. So committee operates on motion.
Move to report.
Second.
It has been moved and properly seconded to report House Bill 854 as substituted. Clerk, open the roll. Clerk calls the roll. Your bill passes at a vote of 8-1. House Bill 854 as substituted. Thank you to the patron.
Thank you. Thank you.
All right, so he has been patiently waiting with Delegate Scott on House Bill 1199.
Madam Chair, I apologize
Delegate
to the
Garrett.
patron and the committee. Can I change my vote on that last one? When do I need to do that? That's my mistake.
Madam Chair.
Well, it will affect the
Point of
impact, and
order.
it'll be in the block as opposed to being out of the block. And I literally am tracking, same thing y'all are doing. Sometimes I'm
So
mess up.
having voted on the prevailing side, you would like to reconsider the vote on House Bill 854 as substituted to report?
Matt, I will make that motion. Having voted on the prevailing side by which we passed House Bill 854, I would like to reconsider that vote so that a member may change their vote.
All right, it's been moved and properly second to reconsider that vote. All in favor, say aye. Aye. All opposed? All right, so now it has been moved and properly seconded to report House Bill 854 as substituted. Clerk, open the roll, please.
Thank you, Madam Chair.
Good job, Tom. You broke the system.
Patiently waiting. 854 as substituted. House Bill 854 as substituted to report. We're waiting for language. All right, clerk, close the roll. House Bill 854 as substituted reports a vote of 9-0. Thank you to the patron. All right, now we have Delegate Scott, who's been patiently waiting. Right. It's a House Bill 1199. You have the floor.
Well, Madam Chair, I think you were saving the best for last. House Bill 1199 is a narrowly tailored bill that grew out of conversations with folks in my county, Board of Supervisors, and healthcare providers. Specifically, an independent-owned oncology clinic has served my region for decades. What they shared with me highlights a broader issue on how our local businesses are taxed when it applies to certain medical practices. Oncology clinics operate very different from most businesses. Their gross receipts can be extraordinarily high, not because they generated large profits, but because they are fronting the cost of expensive life-saving drugs and treatments on behalf of their patients. Those dollars pass through the practice before insurance reimbursement occurs, often months later, with very small margins. Under the current B-POL structure, those pass-through dollars are treated as taxable revenue. This creates a situation where a practice that is doing the doing everything right can see its tax liability grow dramatically without meaningful increase in income. This is a way to make locally owned tangible healthcare solutions more affordable and more doable. Currently, there are regulations that are vague, and some county attorneys are wary of them. This bill makes county and city authority very clear, and if it passes, we can all encourage our localities to opt in. That's right, opt in. This is not a mandate, it's an option. Lowering healthcare costs for our districts. House Bill 1199 does not mandate this tax exemption. It simply gives local governments the option to exempt businesses regulated by the Department of Health Professions if they determine that doing so supports access to healthcare and stability of essential medical services in their community. This bill preserves local control and allows localities to respond to unintended consequences in the tax code. Most importantly, it helps ensure that patients, particularly those undergoing cancer treatment, can continue to receive comprehensive care very close to home. And I ask the committee to support this bill.
Thank you to the patron for House Bill 1199. I'm going to open it up to committee members. Please press your request to speak button to get in the queue. I see Delegate Carroll.
Thank you, Madam Chair. Question for the patron?
Delegate Carroll, you have the floor.
Yes. As a daughter of two parents that passed to cancer, I totally agree with the desire to try to help alleviate some of the issues that we're seeing right now when it comes to the access to providers. However, I'm still a CPA. And as I look at your bill, I see that your bill authorizes a change to the tax code. You and I both are in PD 16, which we both share, but I'm interested more in the guardrails, internal controls, checks and balances that can be implemented to ensure that should we decide to incentivize this change because of the growing need within PD 16, that it won't then turn into how today it's Department of Health Professions, tomorrow it won't be various businesses or even my profession as the Department of Accountancy, to where we strip that local government the power to be able to generate their revenue.
Thank you, Delegate Carroll. The patron has a response.
Madam Chair, I would answer the delegate by saying, again, this is not creating a requirement, it's an option. More specifically, it's already in current regulation, Department of Taxation regulation, specifically 23 VAC 10-500-540 exemption letter E. However, the challenge with that exemption that's in that tax regulation is it's vague. And some localities are hesitant to actually utilize that language to do this. And that's what's happened in my locality. The county attorney was looking at that regulation. And I'll just read this here. Tax commissioner rulings on BPOL, like advisory opinions on nonprofit exemptions, emphasize that statutory exemptions must be strictly construed and that eligibility depends on facts and specific legal definitions. That suggests any exemption not grounded firmly in statute, like simply using subclassifications for medical practices, would be contested. So again, this is something that's already allowed in tax regulation, but this is just bringing some clarity to the code so that counties, cities, they know exactly what they can and what they cannot do. And again, this is not a requirement, so it's not stripping any locality of any authority. They could totally ignore this and continue their taxation process. Or if they see a need in their locality and they have the ability to lower that tax, they have the ability to do that. This is just bringing cohesion between the Department of Tax Regulation and Virginia Code.
Thank you to the patron. I just wanted to lift up the comments from Delegate Carroll, just to kind of have a concern about it overriding the uniform tax, the BPOL tax, the uniform gross receipts. And so when we start doing special tax treatment, I know that there have been some bills in counties, cities, and towns that has the same issue of narrowly defining groups where we are undermining the uniformity and risk shifting the burden to regular taxpayers, which kind of threatens affordability. So I would like to offer the patron a response to my concerns.
Again, this is not a requirement, this is an option. If the locality sees the ability to do this, there's no shifting of any tax burden. If a locality says, hey, we can do this, and we can do this being fiscally responsible, they do it. Again, it's bringing Virginia code and the tax regulation in line with one another. Tax regulation is already there, and local county attorneys are being hesitant to do something without something being very clear in the code. That's all we're trying to do, is bring these two together. There is some vagueness to the regulation. This is just taking reg language and putting in the code, bringing cohesion to both, because they have the tax regulation that allows it, but it's not mentioned in Virginia code. And so they're hesitant to move forward with that, just bringing alignment to both. It's not creating something new, it's bringing clarity to something that's already there.
Thank you to the patron. I'm still opening up for members of the committee. I see Delegate Garrett.
Thank you, Madam Chair. First, I will tell you, and this is true, that I literally Googled Delegate Carroll to make sure that I was remembering correctly that she just got here this year. She's like way ahead of the curve. And that's a compliment, by the way. And I asked that no one put what I'm about to say on social media, because it might damage my reputation as a hyper-partisan. But I think that there's no revenue impact. I think that essentially it changes the when, not the what is collected, and you know more about accounting than I do. And so don't tell anybody I said this, but I would be interested, Madam Chair, if Delegate Watts, the Uber chair, I hate that term, would tell us what she thinks. I really do, because she knows a lot about this. She's been at it for a while. And I think I really like it because I like retaining local authority. But don't tell anybody, but I'd love to hear what Delegate Watts thinks if she has an opinion.
Thank you, Delegate Garrett. We'd like to vote it over to Madam Uber Chair Watts for comment.
Thank you. I thank you for the compliment that I actually know everything, because I don't. So when I look at the gross receipts tax, I'm looking at consistency. This was fought out a number of years ago, decades ago, when there were more than 15 different categories, and they were all condensed into 5 groupings. So I look at this and I become concerned that we're getting back into a lot of different categories being carved out. And I know at the time, one of the concerns was that, and at one point, yes, I worked for the Fairfax County Chamber of Commerce on tax policies. And the concern was the more different categories you have, the more you play off people, because it's just them. So that was one of the concerns of bringing it back into 5 groupings. So I look at this kind of approach to be of concern that we're getting back into a lot of balkanization.
Thank you, Madam Chair, for those comments. I would like to open up to the room, those who are in support of House Bill 1199. Please come forward.
Hi. My name is Claudia Telles. I am the Executive Director at the Medical Society of Northern Virginia. We have over 1,200 members who are independent physicians. And anything that helps the practice of medicine, the independent practice of medicine, where healthcare is delivered at a fraction of a cost in comparison to a hospital system, we support. And so therefore, I'm in full support of this bill.
Thank you. Thank you. Is there anyone in the room who is opposed to House Bill 1199? Please come forward. I know that we have some folks on Zoom who want to offer virtual testimony who is in support of House Bill 1199. I believe we have Dr. Matthew Whitehurst. Dr. Whitehurst, please, with your camera on, offer your testimony. You have the floor.
I appreciate you inviting me to express my views towards this bill, which I very much in favor of, sponsored by Delegate Scott. My name is Matt Whitehurst, and I'm an oncologist here locally, and we serve the community trying to remain independent and employ over 120 staff at this point. Our office spends greater than 83% of all revenue that we receive to repurchase chemotherapy and increasingly expensive cancer treatments. These have steadily gone up there is no end in sight, and our community deserves great care with these treatments. The BPOL tax is uncapped on this revenue, not profit, and a huge tax bill on essentially phantom income for us. For instance, in 2025, our tax bill was a little shy of $289,000, which is just a huge tax bill for a local community office. We have no qualms about paying our fair share of taxes, but this is on revenue instead of profit, the vast majority of which we never see. And it's just going to continue to go up. It seems unsustainably. If we close, I reiterate the comment by the prior person. The entire community closes, the entire community loses if an independent office, has to close and all treatment becomes hospital-based. That's how costs continue to rise. So in summary, I very much would be strongly in favor of House Bill 1199, and I appreciate the opportunity to talk.
Thank you, Dr. Whitehurst, for your testimony. Is there anyone opposed to online for House Bill 1199? I see no one, and so I will open it up back to committee members for questions or comments. Please press your yellow request to speak button. All right, so I will leave last words for the patron.
Thank you, Madam Chair. Again, they're not looking to not pay their taxes. They're just looking to not pay on money that's just passing through. That's the issue is the actual profit versus what they're being taxed on. They want to be taxed on their actual profit. They want to make sure they're supporting their local community and serving the people in their community that are in need. That's the reason for this. This creates that mechanism where localities can do that. They can figure out a way to offset it so they're not being taxed on everything that's going through their business, but only on actual profits. So again, it's not looking to change anything that's not in tax regulation. It's bringing Virginia code and tax regulation in harmony.
Thank you to the patron. So committee operates on motion. It has been moved and properly second to report House Bill 1199. Clerk, open the roll. All right, and that motion fails by a vote for 3-7. House Bill 1199 is their ultimate substitute motion.
Thank you, Madam Chair, members of the committee.
Thank you. All right, so now we have before us, Madam Uber Chair has 3 bills before us. We have House Bill 954, 956, House Bill 960. If you can go in that order, Madam Uber Chair, you have the floor. If you can start us off with House Bill 954, that would be greatly appreciated.
954 has to do with the fact that back, I believe it was in May, the federal government has stopped producing pennies, with the idea that it costs more to produce the penny than a penny's cash value is. So the bill before you was brought to me by the Treasurers Association, who wanted to make sure that they had the authority by ordinance to make regulations as to how you would collect any fees, taxes, licenses due that were paid in cash. If you're writing a check, if credit card, et cetera, you're still going to have the 37 cents. But if you're paying in cash rather than requiring that extra 2 pennies, they wanted to be able to have their own, each locality adopt their own regulations. They asked for it to be open so that no locality would have to redesign its equipment, its collection agencies, et cetera, and that's why they wanted to have it open. With that explanation, and I think I should have gone into that much, when I talked with the Department of Taxation, the comment was made that as far as state tax collections are concerned, states are kind of looking at each other about what are we going to do on this. The retail merchants also came to me with a very clean guidance that they have within their association. If it's 1, 2, or 5, or 6 or 7, you round it down. If it's 3 or 4 or 8 or 9, you round it up. And that's the way the merchants were going forward, but they were concerned about when they pay to the state what they owe, that it is in fact on the full price that was with tax, and that usually is not divisible by 5. So with all of that explanation, but I did want the public to hear it as well. With all of that, I'm still going to ask for the bill to go by 1 week. Again, you've been asking for my experience so much today. My experience, and perhaps Delegate Ware can share this, every once in a while, because we have such a short session, Virginia becomes the first to do something, or we're a year late if we didn't do it. I think on this one, I would like another week to see if we can't be the first to do the proper regulation from the tax department as to when there's any remittances to tax, how rounding shall be treated, particularly when you're collecting a percentage of price.
Thank you, Madam Chair. Just wanted to confirm you want House Bill 954 to go by for the day. Committee operates on motion. It has been moved and properly seconded for House Bill 954 to go by for the day. That is a voice vote. All in favor say aye. Aye. Nays have the same option. All right, so we have House Bill 954 to go by for the day. So next up we have, you can choose which order, House Bill 960 or House Bill 956.
I think I will go to House Bill 956 next.
Okay.
House Bill 956 was heard last year and carried over for study. The study, as indicated in the fiscal impact statement, could not come to consensus. The only consensus that the study, in fact, could come to was that, and I really want to read from that, and now I have to make sure that I've got it before me, 954, and that was, I'm sorry, my apologies, I knew this would happen. And that was that when you are administering the B-poll tax, the only consensus that the group came to was that consistency, clarity, and fairness are all vital to the administration of B-poll and should be central to any action taken to change the deduction administratively or legislatively. The bill before you, as I draw your attention to the wording at the bottom of the page, which starts on line 55, is all reflective of the fact that whether or not about not double taxing businesses who have paid their tax in another state. We have routinely deducted the corporate income tax based on net income. This bill before you looks at the 7 states that have done away with their net corporate income, but which have a tax that is based on gross income, so that there's an even playing field that you have paid these taxes in a different form. The bill specifically says this only applies if the state did not have an income tax. And it only applies, again, if you look down at it with a very close definition of a business activity that such state or county does levy, the measure of which is based in whole or in part on gross or net income or receipts. So it is not based on any other type of activity other than gross or net income. And it can't be both. If it is net, then it can't be gross. But if there is no tax on net income, then if you're paying it on gross income, that becomes a credit to what your income is measured by here in Virginia for the purposes of gross receipts. If I haven't over-explained it. So I would also draw your attention to the fiscal impact statement, where it puts at the bottom of page 1, the Department of Taxation considers this bill as routine, does not require additional funding, significant changes to the department system, and is not impacted by the first phase of their system that they're doing. I underscore that because for consistency and clarity, despite the various localities saying we can't administer it, it would be too difficult, the bill, in fact, just like the tax department is involved in reporting on what the net corporate income tax has been paid in other states, they would do the same as far as determining that for that business, they paid in a state which only taxes gross, and here is what was paid, and here is what is appropriately deducted from income attributable to Virginia that would be taxed under the B-pool tax. Hopefully, I have put all my words in the right order.
Thank you. Thank you for the patron for House Bill 956. This has been a serious hot topic. I remember working on the previous iteration of this bill in 2025, which was House Bill 1743, where a number of commissioners of revenue have asked for this to be broken down into a study. And we did ask tax to form a work group to generate some numbers on, particularly for fairness and equitability on this. And I do have a letter that was submitted to the work group from the Commissioners of Revenue Association of Virginia. In essence, that particular letter to that work group where the Commissioners of Revenue of Virginia formally opposes this House Bill 956 based on the grounds of 3 points. First, fiscal impact. They are worried about the more than $60 million of annual loss across the Commonwealth. They are worried about fairness, particularly with small and local businesses. And they're also worried about administrative burden, where they call for, some of them describe what they would have to do as an administrative nightmare. Quote unquote. So they're also worried about how the money will shift away from local government and, will benefit a small number of multi-state businesses and create an enforcement burden where local commissioners of revenue are afraid they are not equipped to handle. So I just wanted to lift up those comments by many of the commissioners of revenue, and particularly about 99.5% of Virginia businesses, small and local, receive no benefits made up by property taxes. They will have to make this up by property taxes, meals taxes, service cuts, and so forth in order to supply that revenue that has been lost. So I just wanted to lift up those comments since I've gotten lots of feedback on this bill, Chair Watts. And I wanted to open it up to members of the committee for any questions or comments. Please press your yellow request to speak button to get in the queue. Thank you. There are no comments from the committee. I would like to lift it up for those in the room, for those who are in support for House Bill 956. If you could please come forward.
Good evening, Madam Chair, members of the committee. Ethan Betterton with the Virginia Chamber of Commerce. I think Delegate Watts laid it out pretty clearly. We'll just say in response to those concerns regarding revenue, the only revenue that wouldn't be collected by making this very necessary fix is revenue that shouldn't have been collected in the first place, because the revenue at issue was already taxed by one of these other states. I think it's also relevant to point out that when this statute was last visited back in 1996, 1997, most states were not contemplating the taxes that are at issue here, these gross margins, gross receipts taxes. More states are moving in that direction now, and I think it's very important that not just for the business community of the Commonwealth, but for the Commonwealth as a whole, that our tax code be prepared to respond to those future changes. So with that, I thank you for your consideration.
Thank you. Next up, you have the floor.
Hello, Madam Chair, members of the committee. My name is Charlie Russ with the Northern Virginia Chamber of Commerce, and this bill is critically important to the business community because it would reduce uncertainty in the tax treatment of receipts from other states and strengthen Virginia's overall economic competitiveness, and we thank Delegate Watts for her leadership on this issue. Thank you.
Good evening, Madam Chair, members of the committee. Chris Davidson, my company's Orca Strategies, and we're representing the Virginia Peninsula Chamber here today. We love our localities. We want them to receive every bit of revenue that they're entitled to, but we advocate on behalf of businesses for taxes that are fair, that are consistent and stable, and we feel that this is a good bill, and we support it.
Thank you. Is there anyone in the room that's opposed to House Bill 956? Please come forward.
Madam Chair and members of the subcommittee, I'm Katie Boyle again with the Virginia Association of Counties. Really do want to publicly thank the patron for many hours of discussion about this bill over the last year or so. Really do appreciate it. We still unfortunately do have some reservations about this bill. The revenue impact has been mentioned. I think that could be potentially significant in some jurisdictions. I think the full scope is difficult to quantify, and that's one of the things that gives us some pause, is that you're not necessarily going to know which businesses in your jurisdiction are going to qualify for this until, which businesses are doing business in multiple states until they come and ask for the deduction. So I think that's sort of an issue. And the way, this is kind of a complex issue, but the way it's been explained to me is that, when this deduction was originally put in place in the 1990s, that wasn't a consensus position at the time. But since then, administering this has been relatively straightforward because income taxes are sort of relatively straightforward across other states. This is going to open kind of a proverbial can of worms by bringing in different types of taxes that have different thresholds and different filing thresholds, different rules, et cetera. And so I think that's kind of the reservations you're hearing from the commissioners as well. So again, really appreciate all the conversation about this bill, and thanks for your consideration of our views.
Thank you. So I would like to open up for virtual testimony. Is there anyone in favor for House Bill 956 online? I believe we have Mr. Mark Holmes?
Yes, Madam Chair. Good evening. Good evening, Madam Chair, members of the subcommittee. Thank you for the opportunity to speak. My name is Mark Holmes, Tax Counsel for the Council on State Taxation. COSTA is a nonprofit trade association representing nearly 500 multi-state companies operating across the country, including Virginia. And our mission is to promote equitable and non-discriminatory state and local taxation of multi-jurisdictional businesses. I'm here in support of House Bill 956. I want to thank Madam Uber Chair Watts for the introductions of this bill. Virginia's P-Bowl tax already allows a deduction for receipts earned in other states when the taxpayer is subject to an income-based tax there. But as you know, not all states use a traditional net income tax. Ohio's commercial activity tax and Texas's franchise tax are business activity taxes measured by gross receipts or gross income. These taxes function the same way for taxpayers, and yet Virginia's current interpretation denies the B-POL deduction for them. This inconsistent treatment creates constitutional risk, including the potential for multiple taxation and taxation of extraterritorial value. H956 simply clarifies that income or other tax based on income includes gross receipts or gross income-based taxes, aligning the statute with both its original purpose and longstanding practice.
Thank you, Mr. Holmes, for your testimony. I believe that's it I have on the list for who in support for 956. Is there one more? If you could state your name and who you represent.
Yes, Madam Chair, Emily Walker with the Virginia Society of CPAs. We support the bill, and I'll just affiliate our remarks with those made by Mr. Betterton from the Chamber. Thank you.
Thank you so much, Ms. Walker. We do have someone online who is opposed to House Bill 956. I believe we have Kim Klingler. Is that correct?
Yes, thank you so much, Madam Chair. That is correct. Thank you so much. Thank you, Madam Chair. Thank you, members of the committee. I want to thank you, Madam Chair, for summarizing the position of the Commissioners of Revenue. I am representing the Commissioners of Revenue Association of Virginia, and as mentioned, we do oppose this bill, for it is very similar without material difference to House Bill 1743. We absolutely want to ensure that BPOL is implemented in a consistent, clear, and fair way, and using current CITUS, we can do that. We oppose this bill because, as you mentioned, there is a significant fiscal impact. There is a fairness that we need to make sure that not just 0.5% of businesses will be actually gaining benefits from this. And there is a significant increased administrative burden because this would require jurisdictions to be able to audit all of these businesses who could potentially qualify. Thank you so much. Greatly appreciate the opportunity.
All right, thank you so much, Ms. Klingler. So I will open it up back to the committee. I do see Delegate Garrett.
Thank you, Madam Chair. One of these days, I'm going to remember to turn my mic on. I'm torn, but I wanted to ask if Ms. Klingler, I think it was her name, represents the commissioners. I heard from not one, not two, but three commissioners in the last 2 weeks. And so I was hopeful that Ms. Klingler might be able to articulate sort of on the administrative burden and specifically how that might impact smaller localities. We want to treat, Hopewell and Prince George are different than Fairfax and Loudoun. So if she's still on, if she might speak to the administrative burden on our commissioners of the revenue and then how it impacts localities like, Montgomery or Roanoke versus, Henrico or Chesterfield. Thank you.
I'm not sure if Ms. Klingler is still online. Ms. Klingler, if you could answer the question for Delegate Garrett.
Yes, thank you so much for the question. In Arlington County, we're very privileged. We have 5 auditors because we do have multinational and multi-state businesses that we do need to be able to audit. Through the current BPOL, our auditing normally to get larger businesses into compliance can take up to 3 years, and that is with skilled resources. As you can imagine, smaller jurisdictions, we have 5 auditors. They have 5 people in their office. So they do not have the capacity, the resources, or even potentially the skill sets to be able to perform these types of audits. The bill itself would actually require us to gain additional understanding of tax codes in the 50 states, as well as compile, review, and evaluate materials from those 50 states. So while in Arlington, yes, it would increase our timelines and our resource needs. In other jurisdictions, they would have to trust, but frankly, they would have no means to verify.
Thank you, Ms. Klinger. A follow-up, Delegate Garrett.
Thank you, Madam Chair. This is tough, right? Because it's like a unicorn, because ultimately it's a tax cut, and I usually like those. But I feel like it's a tax cut for multi-state corporations that will be the burden of the, $60 million in lost revenue to localities is going to fall on, small business and locally owned business. So I don't pretend to know as much about tax policy as some people in this room, but again, if you're Cumberland County and you got 3 people or 2 people in the commissioner's office, and that's my comment, I'm literally still trying to figure out how to vote because I like tax cuts, but I don't like tax cuts for multi-state corporations at the expense of small businesses locally.
Thank you, Delegate Garrett. I just wanted to lift up, I appreciate Chair Watts and all of the conversations that we've had. I would like to lift up this comment that was a comment by our local Commissioner of Revenue, who said that, the Northern Virginia region has a concentration of multi-state corporations that would qualify. However, every region we know is not the same in the Commonwealth. And so that administrative burden becomes very heavy for other cities and counties across the Commonwealth of Virginia. But I do appreciate Chair Watts. I just wanted to make sure that any other members of the committee have any other comments or questions before I allow the patron last words. All right, so I'm going to allow Madam Uber Chair for last words on House Bill 956.
Thank you very much, Madam Chair. First, the administrative burden is on the tax department to make this determination. That is the clarity and consistency that was an agreement by the study group. No, we do not expect all of the individual jurisdictions to make this decision on multi-state corporations. Two, this has been made on income tax that is paid in 1, 2, 3, 4 states. It has been made consistently, and no one has had a problem with that. Again, using the kind of information that is readily available through the Department of Taxation. 3, on the existing words, at the end of line 51, existing words in the code, is liable for an income or other tax based upon income, or other tax based upon income. Not plural, just either income or another tax, one tax. So you don't have to search out what each and every state might be doing in taxing businesses. Either they tax net income or they tax gross income. And again, that information is one that goes through the Department of Taxation because of the differences in jurisdictions, absolutely, but again, also for clarity and consistency. 4, the reason why it needs to be done now was mentioned. It used to be that all states just did corporate income based on net income. Now you've had several states move to a gross to income approach. The next point that follows directly from that is caught in the letter on the 60 million. I absolutely don't mean to be glib over all of the jurisdictions in Virginia, but this is the possible top loss now. If we don't act, that loss could go bigger and bigger when sometime you have someone saying, you are double taxing what has already been paid to another state under the Commerce Clause. Then finally, I have to react to the letter, which I have read in detail. The bottom line on page 1, the legislation under consideration did not provide any mechanism for the Commonwealth to replace this lost revenue with state funds. That's not my history in what I have tried to do in the equity of taxation and state and local combined. But when we need to have consistency and clarity that reflects modern tax policies being changed by other states, this type of change in the law, clarification in the law, because the law already said that you would do either net or gross. This clarifies exactly what we're talking about as gross and absolutely makes sure that you would never do it if you had net in corporate income tax.
Thank you to the patron and all of your work that you have put forth over the years with this particular issue. So now the committee operates by motion.
Move to report. Second.
It has been properly moved and seconded to report House Bill 956. Clerk, open the roll. Clerk, close the roll. That motion fails by a vote to 4-6 on House Bill 956. Thank you, Madam Chair. I believe you have another bill before us, House Bill 960.
Okay, 960 is another issue that deals with local taxation of businesses. And this has to do with the personal property tax on business equipment. We often think only about personal property tax being the car tax. Well, half of what almost every locality collects in personal property tax is, in fact, the tax on business equipment. The clarification in this bill states, just as we see for approximately the last 20 years, as you look down the list of all of the various ways in which you value these pieces of business equipment, as you get down to number 16, which is on line 57, and this has been in place for about 20 years, it reads, programmable computer equipment and peripherals used in business which shall be valued by means of a percentage or percentages of original cost to the taxpayer. There is an Attorney General's opinion that where it doesn't say original cost to the taxpayer, that it will be the original price on the piece of equipment when it was brand new. So this is the way it has been interpreted in many of the provisions, and the bill before you uses that phrase and adds it to 18, which says all other employed in trans or business as described in subdivisions 1 through 17, which shall be valued by means of a percentage of original cost to the taxpayer. Why do I feel that this is important? I think it's particularly important to small businesses because as you start out, I had for 7 years, I had charge of a nonprofit. And I can assure you, I went to the office surplus warehouse out at Dulles Airport and bought file cabinets that would last because they were built right, but they were built 25 years ago. They weren't thin and tinny as I would have gotten had I bought new from new on the market in what I could afford for the nonprofit. I believe that many small businesses are in this same status. So the fact that what they're being taxed on is the original price of that piece of equipment rather than the price that they paid for it does not reflect the business's activities, ability to pay. And again, since it has been administered for approximately 20 years in the way in which computer peripherals are valued, I believe it is appropriate to apply it to other equipment that has been purchased secondhand at auction or whatever, not the original purchase.
Thank you to the patron. I would like to open it up for members of the committee. If you have questions or comments, please press your request to speak button to get in the queue. Delegate Carroll.
Yes, thank you, Madam Chair. Question for the patron?
Delegate Carroll.
Yes, as we talk about changing how we value property, can you add any specific context as to how this particular theory or practice has been implemented in other, let's just say, property and or in the past, right? How has it been implemented?
Madam Chairman, I would say to the delegate that I'm guided by the Attorney General's opinion that indicated that in all except 18, which says, as I just read, I just want to make sure I'm. Excuse me while I make sure that I have the right words that I am referring to, because this is very important. And I should have referred to 16, as in the Attorney General's opinion, as they opine on all of the others that do not contain the words percentage of original cost to the of original cost to the taxpayer, what the taxpayer paid. And the Attorney General makes it very clear that his opinion is about everything else as far as being original cost when manufactured, except, of course, the legislature spoke and said that when it comes to number 16, it is the cost to the taxpayer, not original cost. So what that then is the distinction that is made. And again, where I am trying to apply this more broadly rather than just the programmable computer equipment.
Thank you, Madam Chair. Do you have a follow-up, Delegate Carroll?
Yes, Madam Chair, I have a follow-up.
Delegate Claro.
I asked the patron the question about how has this been applied in the past, because from an accounting perspective, this bill would require our localities to change their methods of valuation on how they collect taxes to fund their level of government, right? And as we talk about the administrative burden of some various things, I have reservations from the perspective of, as a state perspective, how do we support our localities without providing what I could potentially be a complete overhaul of how they do business on the local level?
Thank you, Delegate Carroll.
Madam Chair, I would say to the delegate that right now, the administration of this is dependent upon somehow determining what that original cost was. However they do that, administratively, they have to say, this was the original cost, even if that's 20 years later. So they have documented that. What the change would do would say, instead of documenting that, what you are documenting is the proof that the taxpayer brings in that this is what I paid for it. If the taxpayer cannot do that, then the administration can go right back to what it was, which says, okay, we think that this equipment was sold in 2010 at this price, and that's where we're going to start our valuation. So it's just a matter of a difference of where you start, but it's no different in how you administer it.
Thank you to the patron. Delegate Franklin.
Madam Chair, I have a question for the patron.
Delegate has the floor.
Thank you. So, and thank you so much for the explanation, and thank you to my colleague for the question. Now, the way I read it, and I'm just seeking clarification, is that that it will provide more flexibility in some sense for how localities actually use this approach. And so it's my understanding, and again, I'm just seeking clarification, that current law is somewhat rigid, but I guess this would provide for a little bit more flexibility, or does it provide for a more mandated kind of approach in terms of the new valuations?
Madam Chair, I would say to the delegate, I think I'll start with beauty is in the eye of the beholder as to which is more flexible, but you start with a specific price. You either start with a price that somehow you can document was the original, or you start with the price that the taxpayer documents that they paid for it. So the flexibility, I don't believe so. I'm loath to call it flexible because it's still a price, one or the other, if the taxpayer can document that their purchase price was X.
Right, and then if you can just clarify how that, I'm sorry, Madam Chair, follow up.
Delegate Franklin.
Yes, thank you. To the patron, if you can just kind of clarify how what you just described relates to what current law currently is. I know you kind of went over that a little bit, but just to kind of bring it home a little bit more.
I would say, Madam Chairman, I would say to the delegate that the answer to that is found on line 63 through 65, which I've amended, and it stops with the percentage of original cost, which the Attorney General has opined says what it means what it says. Whereas I am adding to it that in all instances, it will be of original cost to the taxpayer, which is subdivisions 1 through 17, and that's why I say all.
Thank you to the patron, and thank you, Madam Chair.
Thank you. So, Delegate Garrett.
Thank you, Madam Chair. I'm so thoroughly confused. I just want to go back to the question for the patron, Madam Chair.
Delegate Garrett.
Thank you, Madam Chair. I just want to go back to the example that you gave about the person who's running the nonprofit or the small business who's frugal enough to go to the office supply center and buy the used office equipment at Dulles, and ask you clearly, what is the impact likely, because obviously we don't know for sure, to be on that small business or that nonprofit for having taken the extra steps? Is this going to put more money in their pocket, less money, or is this solely a fix of words in the code? That's how confused I am.
Madam
Make
Chairman,
it simple for me. Please.
Madam Chairman, I would answer the delegate. Obviously, it would be less tax paid and more money in your pocket because you have gone out of your way to use less expensive equipment, and this would tax that value. Therefore, you'd be paying less taxes.
Thank you, Madam Chair. Thank you to the patron.
Thank you, Delegate Garrett. So I would like to possibly ask tax for their opinion about the valuation methodology that will be imposed or changed in House Bill 960.
Yes, Madam Chair, members of the committee. So the difference here essentially is whether you're using sort of a cost that might have been earlier, I should say James Savage from the tax department, a cost potentially earlier that, this might have been bought by, I think potentially by a different purchaser and sort of builds up versus the cost that this actual purchaser used to compute this, if that makes sense.
Thank you. Is there a follow-up for tax, Delegate Carroll?
No question, Madam Chair.
Thank you, Delegate. I just wanted to make sure that members of the committee were clear. Do they have any questions for tax at this moment? Thank you so much for some clarity. So I would like to open it up to the room for those who are in support of House Bill 960. Please come to the podium. Is there anyone who is opposed to House Bill 960? Please come forward.
Thank you, Madam Chair, members of the subcommittee. Katie Boyle again with the Virginia Association of Counties. And, we're still beginning to sort of review and understand this bill. We had a good conversation with Delegate Watts, the patron, and again, want to thank her for always being so generous with her time and letting us talk. I think the questions that the committee are asking are really good and valid because, this is a policy change that actually is kind of complex and it will address types of property that go, far beyond filing cabinets and things of that nature. It will get into much bigger types of property and more complex businesses. And so that Attorney General's opinion that was referenced is something that at least localities that I have been talking to have relied on for some time. There was a tax commissioner opinion along the same lines from 2021. So this would be a departure for them. And so would certainly be open to talking about some of the administrative issues that have been brought up and how cost is documented. And so I think our plea would be as we move along that we maybe try to take some time to fully understand the implications to localities of moving away from this kind of longstanding guidance. And again, appreciate the opportunity to speak with you all tonight. And thanks again to the patron.
Thank you. Fair enough. Next.
Yes, I'm Ross Smuggler. I represent the Virginia Commission Revenue Association. The existing code as it is actually allows a lot of flexibility with localities. Our association really is, half of them are doing it one way, half of them are doing it the other way. So when I was commissioner for 33 years, this piece of legislation would actually, basically reinforce what I do. And because I believe the original cost is what you actually pay for it when you're buying a business. So you bought a furniture business and you had a desk and it was $10,000 when the business was created. You went in, you bought that business and you assigned a value and do the negotiations of $1,000 for that desk. That would be the new price. However, our association is in Northern Virginia. I think in Fairfax and Loudoun and a lot of those localities stick to the original cost value of that equipment. So the existing code as it is gives you flexibility to do whatever the locality wants to do. So.
Thank you so much for your testimony. So I believe we need to open it up for those online who are in support of House Bill 960. Anyone opposed to House Bill 960? So I would like to open it up back to the committee. I believe I see Delegate Carroll.
Madam Chair, question for the patron.
Delegate Carroll.
Madam Chair, I just wanted clarification, and I know it's just me, so I apologize to the patron in advance. Because while I agree with the premise of finding an innovative way to move from our current longstanding guidance in an attempt to provide more stabilization as we move forward with our tax code, I'm just unclear today on how we would ensure that localities aren't burdened with these particular changes, and how, from a different perspective, we can support them through education. I see the delayed implementation of the bill, but wasn't sure if the patron would be open to maybe us laying this on the table and us working out some of the differences to ensure that our localities are on board with current implementation.
Madam Chairman, I would respond to the delegate as I've thought about the options here. I would regard it as a friendly amendment to have a delayed enactment clause so that we have to reenact it next year for it to be effective. That gives the year for the type of discussions that Delegate Carroll is describing to go on. Having said that, in my response, though, I do want to underscore the legislature tells to the locality how the parameters of how you will assess real estate property at fair market value. We don't allow just a flexibility kind of this way, kind of that way. On the sales tax base is what the legislature says the sales tax base is. It's not something that localities can change with flexibility. So I think that approaching this type of tax authority ought to, as well, when I heard the different testimony, there ought to be a consistency. And to get that consistency, a delayed enactment clause may be necessary, but I know that my sense of just personal fairness is based on ability to pay, it ought to be the price of that the taxpayer paid rather than the original cost. But all of that can be worked out in the next year before it's heard by the committee again in a delayed effective date.
So if
I said delayed effective, I really meant to say a reenactment clause, which gives you all another bite at it, gives everybody another bite at it, rather than it just going into effect a year from now. Forgive me, thank you.
Thank you to Delegate Watts. There has been a proposal for delayed enactment. If council could help us with that, a reenactment. If council can help us with that language of what that means.
Yes, Madam Chair, members of the subcommittee, if y'all move ahead with the reenactment clause, the current second enactment clause that delays the effective date to July 1st, 2027 would be replaced with language that requires a reenactment for the following session before this bill would go into effect, as Delegate Watts had mentioned.
Okay, so that would delay it to 2028 or 2027?
It would be 2027.
So July 1, 2020?
Yeah.
Okay. So which line will we be amending, council?
It would be line 81, the current second enactment clause.
Okay. So before us, we have the patron has proposed a delayed reenactment clause for on line 81. The committee operates on motion.
So moved. Second.
Is there any discussion? It has been moved and properly seconded for to amend House Bill 960 with the delayed reenactment clause. Is that a voice vote? a voice vote. So those in favor say aye.
Aye.
Nays have the same option. All right, so House Bill 960 as amended with the delayed reenactment clause. I wanted to make sure that we did offer testimony for both for and against in the room. Also, if there isn't any testimony virtual for or against. So there is no virtual testimony. I wanted to open up again back to the committee with House Bill 960 as amended with a delayed reenactment. Any discussion? All right, so Delegate Ware.
Thank you, Madam Chair. And I hesitate to say anything extending this meeting. One thing I would want to say, and we've seen wonderful evidence of it tonight, our chairman has worked tirelessly across a lot of years to equalize, to rationalize is probably the better word, our tax code, going and she bends over backwards to accommodate a lot of folks. And we've seen evidence of that tonight in the conversation there is. And it can be at times challenge for all of us in the room to keep up with her on that. So I felt like I had to mention that at this point. I know we've been through a long meeting, but I think it bears noting about her concern to make this code as competent and as equitable as it can be.
Thank you, Delegate Ware. We are all in agreement with you, and certainly we sit at her feet and learn on a regular basis all the work that she has done, and certainly she has tried to make this entire overwhelming tax code equitable and distributable for everyone across the Commonwealth. And so would like to commend you on your work. So we do.
Chair, I will only say thank you, but I want to underscore I learn every day. It is complex and challenging.
Thank you to the patron. So I believe a committee operates on motion if we have not taken up House Bill 960 as amended.
Move to report as amended.
It has been moved and properly second to report House Bill 960 as amended. Clerk, open the roll. All right. Give you some time. All right. So clerk, close the roll. It has been reported House Bill 960 as amended reports on a vote 10-0. All right. So that believe ends our docket on this evening. I'd like to thank all the committee's members for a robust conversation. I would move for a motion to adjourn. It has been moved and seconded. All in favor, say aye. 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 So a committee is now adjourned.